Recently, retail traders are getting shocked by the sudden volatility of the crypto market, and everyone is suspecting how the prices will be in the near future. Everyone is stunned by the uprise and downfalls in the prices, and many predictions are being made. Currently, the technicals are indicating some volatile movements in the future. Here are the top 3 price predictions in Bitcoin, Ethereum, and Ripple, which have left retail traders still in disbelief. Starting off with the updates on the stock market. What situation is going on in the U.S. stock market? First of all, just to give you a quick update on the U.S. stock market, the last couple of days have seen a continued move to the upside for the NASDAQ 100 index. After successfully retesting this previous level of support, which then flipped into new resistance, it is now acting as new support again, with once again a successful retest. This doesn't mean that this larger downtrend is technically over, well, at least so far, because the stock market still is currently in both a lower and higher price structure. Therefore, until we start to see the stock markets begin forming higher highs and higher lows again, we are still technically within the larger downtrend. That is just more of a shorter-term bullish relief seen relative to the larger downtrend. This is clearly acting as a pause in the downtrend. What were the prices of Bitcoin in the last week of October? The price of Bitcoin is potentially completing the retest phase after the breakout from the symmetrical triangle pattern, and this is happening while it is getting closer to a much larger breakout on these larger time frames. During the last week of October, the bulls produced a very outstanding 10% comeback, and the price of the Bitcoin exchange was at $20,596. Back in the last week of November, the bulls were showing power because the profit-taking confederation remained above October's trading size. It was also said that the next bullish targets would be liquidity zones near $21,400 and the psychological $22,000 level. The auctioning price back in the ending part of October was just a 23.6% retracement, according to a Fibonacci retracement device, which enclosed a substantial part of the rally. Back then, it was presumed that the invalidation of a bullish outlook could arise if the bears resulted in a breach into the earlier spectrum, probably at $19,800. There would have been a further decrease toward the $19,200 liquidity zone that resulted in a 7% decrease from the existing market value. What are the current Bitcoin price pumps? As of the beginning of November, Bitcoin price currently trades at $20,417 as the lesser time frames converge, resulting in a stalemate-like expense action. The previous 8-hour candle demonstrates the bears verifying a climax successfully through the 8-day exponential pushing average. Therefore, a decrease below $20,200 can trigger another liquidation occasion. Many traders also have unpacked an extended position on Bitcoin upon the first contact with the preceding average cost of about $20,200. The current trading spectrum is just a 38.2% retracement, according to the indication by the Fibonacci retracement device surrounding a powerful part of the rally. Upon the bulls failing to maintain their grounds, the next possible target is going to be the 61.8% retracement level at $19,900. If the 61.8% fib level ceases to function, the trend will be in jeopardy, with bearish targets near the $18,900 liquidity zone. In the charts, it is clearly seen that the price action and the RSI had entered into a time-setting range with 2 converging lines which show that. What this technically means is that volatility is in the tightening range. A key level of resistance on the 3D Bitcoin chart is sitting roughly around $20,000 per Bitcoin, and this level of support is sitting at around $18,000. A 3-day candle can be seen close, either above resistance or below support, to confirm the break of this falling wedge pattern on the 3-day Bitcoin charts. And this, once again, would likely signal the next extremely volatile move from the larger time frames. What were the price blows of Ethereum past bears in late October? The bulls have pulled off a 20% comeback in less than a week, which stunned the price of Ethereum in the whole market. Ethereum is basically a decentralized smart contract token, and it is auctioned quite well above the previous range in the last week of October. All of this took place at the time of volume tapers during the profit-taking consolidation. The price of Ethereum had traded at $1,550 at that time. Ethereum's current price is seen as a shallow retracement, according to a Fibonacci retracement tool that surrounded the most powerful part of the rally. This situation has been seen as a similar one to Bitcoin's, as in the last week of October. A great place for sideline bulls to enter the market could be a breach of the 38.2% fib level at the $1,487 price level. The invalidation of the bullish thesis could emerge if the bears can tag the $1,400 level. The last trading range could take the Ethereum price and could also fall near the lows of around $1,270. The Ethereum price could furthermore be sucked back into the previous trading range and potentially fall. Such a move would result in an 18% decline from the current market value. What is the current price of Ethereum? In the beginning of November, the price of Ethereum as the decentralized smart contract token indicates a few favorable signals implying that the uptrend will continue. The price of Ethereum consolidates at the upper bounds of the $1,500 level after an outstanding rally of 20%. Ethereum has found support from the 38.2% retracement level, according to a Fibonacci tool surrounding the substantial part of last week's rally's indication. The superficial pullback may be considered as a demonstration of the underlying resilience of the bulls during the existing move. As of now, the price of Ethereum auctions at $1,573. A breach above the $1,600 level could catalyze sidelined bulls to enter the demand and target the $1,800 liquidity area for an additional 15% rise if the market is genuinely bullish. The stair-stepping cost action is higher since the breach of Ethereum to the 38.2% fib level could be considered a sign of calmness before the storm hits. That's not a very good sign to look for, is it? The Ethereum bulls are confidently poised to rally, which is indicated by Elliott Wave Trend Channel surrounding the initial stages of the volatile rally. A powerful influx of bullish price action could enter and resolve the current range. The uptrend's health depends on lower fib levels remaining untagged. There could be quite a complicated breach of the $1,450 zone, as it could cause a selling turmoil. If the same bearish scenario takes place, the Ethereum price could be tugged back into the 21-day simple moving average at $1,370. This means that the price action would result in an 11% decline from the contemporary Ethereum price. How did the price of Ripple get back to 50 cents in the latter part of October? Back in October, the price of XRP auctioned at 47 cents. This was because the bulls operated to breach the 8-day exponential moving average and tested it as support. The digital remittance token was up 5% at that time. The following limitation for the bulls to achieve will be the 21-day simple moving average, which is currently positioned at 48 cents. The technicals suggested that XRP had one more upswing near the 50-cent zone before facing stronger bearish pressure. If the bears could breach the candle pierced through the 8-day exponential moving average at 0.456 cents, then the invalidation of the bullish thesis targeting 50 cents could take place. Ripple's uptrend potential is complicated by the relative strength index. Why? Well, because the indicator hovered above both moving standards in supportive bullish territory. What are the current prices of Ripple? As of now, XRP auctions are at 46 cents as the price has established resistance from both the 8-day exponential and 21-day simple moving averages. This could be the final leg of the coiling triangle surrounding the digital remittance token's price since September, as it is a newfound low. A classic Elliott wave triangle setup should catalyze a run up toward 66 cents if the market is actually bullish. A higher low has been established at 0.449 cents as the price hovers below the indicators. There could be an invalidation of the bullish thesis targeting 56 cents, and it could occur if the bears sweep the lows at 0.449 cents. If the bears manage to tag this status, a liquidation occasion targeting October's swing lows at 42 cents appears probable. Such a move would result in a 10% reduction from the existing XRP price. What do you guys think about this whole situation? Are the prices of Ethereum, Bitcoin, and Ripple going to stay volatile like this? Or is there still a chance of them getting stable sooner or later? Let us know in the comments.